Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Federal is now up 20%. That really has been your stock of the day. What would be really interesting today is to see the kind of delivery numbers on Federal Bank, because I mean, it's a 17,000 crore market cap stock that we are talking about. So obviously among the largest mid caps, 750 crores of turnover. So good chance that you have decent delivery buying. But of course, we'll find out. There are a lot of other stocks which have done well today. Union Bank up 8%, CG Power is up 7.5% today, Allahabad, PNB, basically a day of beaten down stocks. Ashwani and Mitesh with us for BTST calls. Ashwani, you go first. On the index, you would recommend taking profit home? And what about individual stocks?
Yeah, I would think so, because even if you got in a bit late, 200, 250 points people should have, and it is still a sideways market. So take profits on your index positions. On individual, Bata is a buy with a stop of 830, target of 856. Maruti is a buy with a stop of 9400, target of 9620. And India Bulls Housing is a buy with a stop of 1140, target of 1175.
Okay, so going with plenty of buy calls into last half hour. Mitesh, what about you? What's on your list?
Two BTST calls. In fact, Bata features on my list as well. There's a BTST with a stop at 828 for targets close to about 850, and Punjab National Bank, and after a long time some PSU bank comes into the buying list. That's a BTST with a stop at 77 for targets of 80.5.
Okay, that's some BTST calls. Before we invite our alpha manager for the day, Amrish, in the banking pack, anything that you would want to buy? Today is a good day.
In fact, I've been recommending PSU banks for quite a while, last 3-4 months, maybe slightly more, but again, they've not really moved. But taking an example of Federal Bank, as to what had happened last quarter around the same time, after the results, people had started writing off Federal Bank, cracked, I think, 25-30%. Today, it's up basically because of better credit growth and stable asset quality. I think the bad boys of banking, which is the PSU stock, should, I think, start shining going ahead, because they've been completely written off. The worst of the provisions has been done. I don't think we'll see a great credit growth like Federal Bank for the PSU banks, but at least once we start seeing stable asset quality, which I think should start from this quarter onwards, I think people will again start looking at them, and the sort of a move which we could see possibly over the next 3 or 4 quarters could be something similar to what we have seen in Federal Bank.
But you know, just to play devil's advocate over here, Amrish, I mean, from a risk-reward perspective, if you're looking to make money over the next 6 months, then what are you better off buying, a South Indian or a Federal? I mean, known entities, again, markets sort of propensity to go towards clean growth companies or growth banks.
That's true.
Or is there any point in trying to once again pick the bottom on a PNB or on some of the other PSUs?
No, I think it has to be a mix of both these. I mean, see, you'll surely have a Kotak or a HDFC which will give you the stability for your portfolio. But do you expect a Kotak or a HDFC to give you 40-50% returns in the next 1 year? No.
No, the choice between a PNB and a Federal Karnataka.
Yeah, surely. I mean, you really can't have 10% of Federal Bank in your portfolio. You may have 2% or 3% of the portfolio. But then at the same time, the rest 3 or 4 stocks can be the PSU banks.
Okay, Amrish, stay on with us. Of course, we'll come back to you for some more questions. For now, we have our next guest, our alpha manager for the day, Siddharth Bothra of Motilal Oswal EMC is with us. Siddharth, hi. Good afternoon. Thanks a lot for joining us.
Good afternoon.
So, you know, your portfolio has been relatively safe because you've had stocks like Britannia, the HDFC Twins, Kotak, Maruti. That also made a comeback after that big decline. But thoughts on the overall market and the mid-cap space? Yesterday, we had the Nifty Junior, for example, down 600 points. You reckon we are perhaps at the last leg of that downtake on the broader market, and it's good time to start building some portfolios, or you reckon there's some more to go considering the kind of big move that we had in 2017?
I would go with the second option. I think we had seen huge excesses happening on the mid-cap and small-cap space. Right from, if you look from 2013 all the way to 2017. In fact, in 2017, it said the mid-cap index was up some 48% versus 28% for Nifty, which was like a 20% difference. And if you look since Jan till today, mid-cap index down some 15%, 14.5%, and your Nifty is up 4%. So roughly around the entire difference being made up. But I feel that the excesses on the mid-cap were quite a lot, and even today if you look at the valuations on a risk-reward, I think large caps look much more attractive. So I believe you will see some more mean reversion happening, wherein the large caps will do better. But having said that, I think the reasons which led to the major diversion between large caps and mid cap, which were there in the last 2-3 years, is no longer there especially after the major, the SEBI move on MF reclassification. So I think going forward, the performance difference between these two will not be starkly as different as it was in the recent past.
Okay, speaking about some trends, I know we can't discuss stocks, Siddharth, but you do own Ashok Leyland in one of your funds. I'm not going to talk about that stock or that company, but generally there's a lot of upheaval. I mean, a lot of talk with these overloading norms. We've seen price correction on a couple of the CV names, even CV financiers for that matter. What is your opinion of this entire episode that's played out?
So I think there's still no major certainty whether this entire move is on a prospective basis, or does it also apply on a retrospective or on the stock itself. So my sense is it is on retrospective stock as well, because if you think about it on a prospective basis, it would be, I think, negative for almost everyone, whether it's a transporter, whether it's a CV financer, or even for the manufacturer in the short term. So given that if you go with the assumption that it's on the entire stock and prospective both basis, then I would think it is more positive for transport players, the freight people, also positive for maybe the CV financiers, but not so positive for manufacturers in the near term, because it will definitely impact demand in the next 3 to 6 months for CV manufacturers.
One stock where you've seen some losses of late is Interglobe Aviation, despite the fact that crude has come off from the highs. Your thoughts on the aviation space now?
I think the entire for when you look at aviation space, crude is such a large segment on the cost side, and when crude moves up from say 30 to 80 in such a short term, such a sharp move, you will see pressure. So I think in a way it would get impacted by what's happening on the crude side in the near term at least. On a longer term basis, once the crude settles, I think even at a higher crude price, maybe some companies will have an advantage because they have a cost advantage, and particularly in an environment where crude is high, the competitive intensity, in a way your competition suffers much more. So they would actually have an advantage, but near term, obviously everyone gets impacted, and even a low cost player will get impacted. So it would be negative for the sector.
Okay, fair enough. On crude, you also do own some refining companies. I think HPCL is one of the holdings in the funds. You looking to change the stance at all as we are getting closer to elections, or are you reasonably confident that these companies will hold their own, because the stocks have really been punished in the last couple of months. They've destroyed a lot of wealth as well.
So I think what's happening here is clearly, crude, as if it kind of, even, many of the OMC players themselves have mentioned that till crude is below 100, the decontrol stands. So I think in an environment where, there's a decontrol for pricing, these companies have got beaten down, but there's a lot of value in that, and clearly the election, the time period between the election and now, there could be some uncertainty on the price moves and all, and it may not be on a regular basis, but we see deep value in most of these OMCs, and in an environment where crude were to fall, they would, I think, again come back strongly. And if you look at their numbers, the numbers have continued to be very strong. So we continue to be positive on AMCs.
Okay, you have a lot of exposure to insurance. You have HDFC Standard Life, there's ICICI Lombard, Max Financial as well, would fall into that category. What is so exciting about this space? We had numbers from ICICI Lombard today.
Yeah, so I think Lombard numbers are very strong. You know, I mean, without getting into stock specific thing, I think we are very positive on the insurance sector. You know, we think it's very similar to where, say, private banks were 10, 15 years back. There's, you know, both on the life side as well as in general insurance side. These are good businesses, and within that, you know, you're getting some of the companies with very strong management credibility, you know, proven track record. So we find both the you know, on the insurance side, both life as well as the general insurance very attractive, and we have disproportionate weightage in the insurance sector in our fund.
Siddharth, now let me draw you into the debate we were just having before you joined in, this quintessential eternal debate between, you know, how and when and if at all to try and pick the bottom in PSU banks, because, you know, Federal's numbers were very good. Obviously, that's a corporate-facing bank. But the question is now with this government talking of again a round of capitalization for PNB, etc., the whole IDBI deal. I mean, I don't know if there's any sense in looking at PSU banks afresh. You are right now sticking to the biggest and the best private sector names in your funds. Any view or any rethink on PSUs?
You know, this has been, you know, I've seen this debate right from the last 2-3 years. It's been going on for a very long time. There's always this assumption that, you know, now all the, you know, write-offs are behind us, all the provisionings are behind us, and now things will suddenly change. But I don't think, you know, the entire pains through. Even otherwise, if you look, there are some sectors which have not been completely provisioned for. And even if you were to kind of account for, I think the ROEs for many of these companies remain very low, much below their cost of capital. Growth remains an issue where, you know, these companies, some of these banks are not able to grow, and the private banks are growing at a much rapid pace. So we would rather stick with quality where, you know, there's a consistent growth, there's a high quality of management, you know, across cycles they've proven themselves. So we still don't see any merit in, you know, changing our stance in case of, you know, on the bank side.
All right, Siddharth, always good talking to you. Thanks a lot for your time today. Appreciate. That's the word from Motilal Oswal, AMC. By the way, take a look at the mid-cap index because that's up 422 points. I'll just pull out both for the mid-cap index and Nifty Junior, the weekly data, the week to date. That is going to be important because if you take a look at the Nifty Junior, that's up about 315 points, about 1.1%. But the large, that's of course the 70 data, but still down for Nifty Junior. And let's pull out the same data for the Nifty mid cap, and over there I think it will be really interesting data point. Okay, there we have it. The point I'm trying to make here is that the mid cap index is having a far bigger rally today than the Nifty Junior, than the Nifty. And the Sensex. Sensex is up only 0.5%. Let's not forget that. You know, today's move looks large. Yeah. The Sensex is up 0.5% as we speak. The mid-cap index is up 2.4%. And, you know, if you take a look at the top gainers today, I mean, of course, there's Federal Bank. After that, there's Union, there's Reliance Communications, there's Allahabad Bank, there's CG Power, there's Shrey Infra, there's Jain Irrigation. Most of them are basically in a bear market of their own. They're just having a massive short covering pull. I think on the bank buy I wanted to pull Nifty Junior's data is because yesterday that had a big decline, 600 points. It's only reclaimed 300 out of that, whereas on the mid-cap index, the move is far bigger today.
Okay, well, that's the shape of the market right now. Mid-caps are having a field day. Is it going to last? Is, of course, anyone's guess at this point in time. We'll take a break. We'll come back with more market talk. Welcome back. So the screen's green for now, for what it's worth. Amrish, I want to take up one stock that Anuj just referred to, CG Power. It's been all over the place and largely on the lower side of the screen in the last 1 year. Today it's up. Now, I don't know if it's just F&O, fun and games or something else. And fundamentally, I think the market still wants to know what they're doing with their international business. I think that Hungarian unit. Any thoughts?
No, in fact, I've not been tracking this stock very closely, so it's a bit difficult for me to really comment on that.
Okay, fair enough. Let me ask you about another cross-section of stocks that everyone's wondering. Is this a buy opportunity on PVR or just stay away?
No, I mean, I would say stay away for a while.
Okay.
I mean, especially since we don't have any big bang movies coming, at least for the next 3 or 4 months. I think the next major one is around, I think around Diwali. And in between, we have this directive from the government which actually would reduce their I mean, margins to a certain extent, because generally the margins on food is close to about 65 to 75%. I think that will be a hit on the margins as far as these exhibitors are concerned. So I think at least for the next 2 or 3 months, better to stay away for a while. I mean, they've had a very good run, so I think they are due for a decent correction.
Okay, they're due for a decent correction. Amrish, thanks a lot for joining us today. Ashwani, I wanted your thoughts on Hindustan Unilever. That, in fact, is ending at the low point of the day, down about 4%. Of course, today the market's move has been on risk on, so that's why you've seen a lot of mid-cap surge, and Lever is reacting to numbers and perhaps calls on valuations. But 4% downtick, good time for investors to buy, or you think this one should correct a bit more now?
The high of today is 1780 on Lever, and right now it's 1680. That's 100 points off. So I would think, some sort of correction is on way here. Maybe closer to say 1600, 1620 would be a good level to get into Lever. But I think just correction after a big move. So that's about it. Today was, more of short covering. So things like Kotak, IndusInd, Lever, they didn't really perform. But I think once the, short covering is over, all of these large stocks should start participating again.
Okay. By the way, there's some news coming in on dairy exports. I've announced a 10% waiver on dairy exports. There's a spike on Parag milk, I can see. Let's get some of the other stocks as well, the dairy stocks up for you. Yeah, so that one is reacting. All states will be implementing the decision on dairy exports.
Where is this coming from?
This is Piyush Goyal, I mean, the finance minister speaking, but I mean, I'm not quite sure what kind of...
No, let's find out where it's coming from actually, because sometimes these moves can be random. Let's get you some more market opinion. Earlier, we spoke with Ajay Srivastav of Dimensions Corporate Financial Services and asked him if the present market scenario is a good place for investors to build portfolios.
In fact, unfortunately, it's changing. The scenario is changing, and the scenario looks like you almost feel as if the ground is being cut under you, because it's not about building portfolio, it's about the environment that we're operating in. Nothing seems to be conducive. One thing goes well. You saw the multiplex stocks, they get butchered by some absolute idiotic regulatory policy. You've seen the ASM impacting the mid-caps. So we're not sure exactly, there is no certainty of policy, there's no certainty of a regulatory mechanism to make it sure that, listen, the worst is over and we're going far. Number two is, economically, IIP data is still on a slope. It's not moving up. It's from 8% is down to 4% this time. Now, when IIP slopes down, Anuj, there's very little case to be made that the broader market will move up in this direction. That's not going to happen. When IIP goes down, means the demand in the country has gone down, and the first people to get affected are the smaller companies, because larger companies can take a better share, cut prices and still survive. The smaller one can't. So, so the case that, yes, it's a good time to build a portfolio, I think is slipping under us, because the regulatory scenario, environment, economic growth, everything is kind of conspiring together to give in a feeling that, listen, it's not the worst is over. The worst can still come. June results will show some part of it. But more than that, what do you do with regulatory overhang? What do you do with the policy directions which are so ad hoc that your best planned portfolio could go haywire in 30 seconds?
Ajay, there is also a rural theme playing. Most of the FMCG guys we spoke to, including a person like Godrej yesterday, Vivek Gambhir, he's more an urban supplier, but he said that the rural growth is growing faster, rural market is growing faster than urban for now. If you buy that idea, would you be buying any of the FMCG or rural related plays?
I already hold the FMCG stocks, but I don't agree with what they're saying. What they're not saying is that they are getting market share from the smaller players. It's not demand which is driving them, and no, you don't want a Godrej or a HUL to say that listen, our competition is going down, so we are grab a bigger market share. Number two is, thanks to the road infrastructure, they're going deeper and deeper into the country, where the regional brands were kind of holding the fray. Now, regional brands are losing out because they're small, and their access was the bigger advantage. Their access advantage is being dissipated now. So I'm not sure I'm buying it created a theory that it's the demand which is growing this HULs and others. I think the story is also partly demand, but partly access to this new market. So it's not necessarily demand. I think it's also market share which is growing for the top 4 FMCG companies.
I think one thing that this year has taught us is that if you invest in the market leaders, you will not only preserve your capital, you will grow it as well. You think that strategy will work for the rest of the year as well? I mean, not just HUL, but you know, the Bajaj Finances of the world, Britannias of the world. Do you expect elevated levels despite steep valuations?
Well, Sonia, I certainly think. And I think the reason being the rest of the market is still playing catch up. They are under-invested stock. Even if you look at the holdings of the stock, the shareholding pattern, you see very small amount of retail holding in those stocks. It's a mutual fund, it's a FIs, and it's a 51% global owners or the Indian owners, whatever it is. So I think if the slice of the share ownership is so small that even if you took a 10 to 20% movement from the mutual fund money into the large stocks, that causes a big rally because there is no supply coming. There's nobody diluting in the stocks. So with limited supply and more churn, as more and more people realize that, listen, this is the only lifeline in a choppy sea. So there will be a definite move, and it's already happening. You're already seeing these prices don't correct. Day in and day out, market can go up and down, they don't correct. And I think the reason they don't correct is, one is you saw HUL, 19% growth rate in profit. Fantastic in an environment like this. You saw Indus in 20%. So they are in the range of 19-20%. Nobody else is going to be. So demand supply of shares and the assured returns of about 18 to 20% profit growth quarter to quarter, I think will drive this market further and further up and will become further and further skewed. People are still playing catch up, but there is a whole amount of portfolio still waiting to be churned.
If the decision is made and if you have other states following it up, how do you approach a stock like PVR? You know, you have been, of course, a fan of the stock. You have been a fan of Ajay Bijli ever since the IPO. You know, thoughts on this has been a multi-bagger. But from here on, are the risks too many now?
I think it will be struck down in the court. I don't think it's a risk. I think it's an opportunity. I think it will be struck down in the first court challenge it will get. It will be struck down because that's ridiculous. Now, where do you take it to? You go to a restaurant, you go to a hotel, you go to any establishment, you go to see a show, you go to see a play, for instance, and you are not able to buy, you will take your own food there. Now, that's ridiculous, absolutely. I don't think it will stand the legal scrutiny even 1 minute. So I believe, and we are holding on to the stock, we are adding up, in fact, to the stock at this point of time. So to that extent, we are biased. Okay, that this will not stand legal scrutiny.
Okay, look at the way these stocks have gotten very excited, but we need to keep in mind, we need to see whether there's any export revenue right now at all or not. Stocks are very excited. Let's hear out what the finance minister said on the matter.
खुशी की बात यह है कि सरकार ने एक्सपोर्ट जो होते हैं मिल्क और मिल्क प्रोडक्ट्स, मिल्क पाउडर, सब पे 10% एक्सपोर्ट इंसेंटिव देने का निर्णय ले लिया है, अनाउंस कर दिया है, नोटिफाई कर दिया है। इसके अलावा कुछ राज्यों ने भी अपने एरियाज़ में मिल्क को सपोर्ट दिया है। महाराष्ट्र ने, गुजरात ने अपने लोकल मिल्क प्रोड्यूस के ऊपर सपोर्ट दिया है। कल हम फिर एक बार इस पे और चर्चा करेंगे बाकी मंत्रालयों से कि मिल्क की कंजम्पशन बढ़ाने के लिए और क्या स्टेप्स लिए जा सकते हैं जिससे मिल्क की कंजम्पशन बढ़े। और रेलवे से भी एक दरख्वास्त आई है एग्रीकल्चर मिनिस्ट्री की कि रेलवे स्टेशंस पे भी मिल्क की उपलब्धता हो, तो कई लोग मिल्क देना चाहेंगे बच्चों को और पीना चाहेंगे, तो उसके लिए भी आज रेलवेज इस पे गौर करके 2-4 दिन में इस पे भी निर्णय लेंगे।
Markets going home with gains of over 78 odd points, 11,000 on the Nifty. And banks have to be thanked. Actually, it's been a decent day for OMCs as well. These stocks have also held on to all their gains, unlike in the recent past where the OMC rally tends to fizzle out by afternoon.
You know, there's an issue here with OMCs today. We discussed in the morning. Today's a bit of a double factor in oil marketing companies. A, the crude has moved, and B, the dollar-rupee equation has really moved in favor of some of these companies. So in rupee terms, today has been a huge decline in crude prices. And if you're putting now a top at 75 instead of 80 on crude, I think that could be big news. So that perhaps explains also the fact that some of these stocks had fallen a lot. I think HP, BP, IOC would have fallen 30-40% more than that from the highs. So there was room for some of these stocks to sort of gain because again there was a bit of an under ownership here today.
Ashwani, just very quickly, 3 minutes into close, is there more to go on this trading bounce perhaps on OMCs?
See, they are very, very, very oversold. So just for that reason, if crude stays here, you could easily have a 3 to 5 day type rally.
Okay, 3 to 5 day rally. Overall, Ashwani, what's the final verdict for the day today? The Nifty is closing above 11,000 and the Bank Nifty at 27,000.
See, at best that we have held the range of 10,950 to about 11,050, and that way maybe the downside has been protected a little bit, but still sideways. I don't think unless you are able to clearly take out 11,050, you can say that we are moving higher. But right in the middle of the range.
Ashwani, we've just lost the video image there. We'll just fix that. Prashant Prabhakaran of Yes Securities is also joining into the conversation. Prashant, just your thoughts. Banks have led the market today, and Federal Bank in specific, that number. What in financials are you buying at the moment?
So it is the NBFCs. Actually, we are liking Group Finance. It has been on our radar for quite some time. It remains a space that the government also focuses on. Apart from that, the larger ones, it remains HDFC Limited, which is a buy from on our books. We would prefer sticking to the larger names in not just in financials, but overall as far as the markets are concerned.
Okay, Prashant, just about 1.5 minutes left, so we'll come back to you for some more thoughts. For now, let's just quickly recap the day then. Been a good day. The Nifty is up 75 points, closing above 11,000. The Bank Nifty is closing at 27,000. The big move, of course, today happened in the mid-cap index. That index is up 2.5%. So huge move, of course, happening on that. But in terms of other stocks, the Federal Bank move was visible in some of the other stocks as well. So SBI, Axis Bank, ICICI, all these three stocks were up quite a bit. While marketing companies rallied, so HP, IOC, BPCL were higher. Hindalco gained a bit in trade. Cipla and Sun Pharma were higher. Tata Steel made a bit of a comeback. UPL made a bit of a comeback. So these were some stocks gaining ground today. Bajaj Finserv was higher, though Bajaj Finance was relatively muted today. On the way down, there was only one stock really that stood out, and that was Hindustan Unilever. That was down about 4%. But keep in mind, that's after the kind of huge run that we have seen in the stock. So I think disappointing in the numbers. It's just that it had run up too much, perhaps. So some profit taking on that stock, down about 4%. But today, of course, was a day of mid-caps.
Oh, absolutely. And within mid-caps, I can talk about banks. In both mid-cap banks and slightly larger banks. So whether you're looking at something like Federal itself, which has been the headline maker of the day, 20% up on that stock. Of course, Union Bank about 8% higher, South Indian Bank 7%. Let's pull up Karnataka Bank. There was a rub-off effect on a lot of these other mid-tier banks as well. And most of them had decent gains to boast of. Something like Allahabad Bank. On the pure PSU side, you've got something like an Allahabad Bank, Bank of India, many of these banks, even Corporation Bank for that matter, smart 7-8% gains coming in on a lot of these names. Beyond banking, if I take a look at what worked today, what a smart move on MRPL. 12% final count on MRPL. Some of the MSO stocks that have been pummeled in the last 1 month, they were making a bit of a comeback. Hathway, Den, 7-8% up on these stocks. Adani Power has seen a 7% up move today. Didn't mention PNB. There's a lot of buzz around maybe some more capital infusion in PNB. That stock was up about 5-6%. Arvind has managed to put on 6%. NCC is another strong name. LIC Housing Finance. So plenty of gainers on the mid-cap side of the screen. Then the crude play continued not just with OMCs, but even on aviation stocks and paint stocks. So Berger, Jet Airways, Interglobe. Plenty of green on this entire universe. So plenty of gainers. I'll just quickly talk about this milk rally. Let's see if there's any follow-through tomorrow or not. But Prabhat Dairy, Hatsun Agro, a lot of these stocks suddenly spiked up in a big manner when the news came in on certain export incentives that would be allowed. Finally, to cap it off, losers in the mid-cap universe, Syntex Plastics, disappointing numbers, 8% down there. Radico Khaitan is on the lower side today. And some of the tech names like KPIT Tech, even a First Source, if I remember correctly. These were some of the names where there's been a little bit of a cool-off. But otherwise, great market breadth for what it's worth. And a 400-point rally on the mid-cap index, Anuj. But the question is this again one of those one-day wonders?
No, I think that's something that we'll find out, of course. But you know, today also what was helping was that you had that one big stock which was contributing today, I think, Federal Bank. Yeah. And if you take a look at the mid-cap index itself, and just 104 point out of the 400 point on the mid-cap index came from Federal Bank. So, we normally talk about, for example, HDFC Bank, sometimes representing the entire Bank Nifty rally. Today, 25% of the mid-cap rally came on account of Federal Bank. So, 400-point rally, 100 point out of that was contributed by Federal, but still, it's a big move that you have seen. Let's take some final thoughts then. Prashant, hi, good afternoon. So, oil marketing companies, finally, some good cheer going for them. Good to buy.
Yeah, finally, it's news based. It's basically crude has come down. That is why you have benefits that have flown. Whatever happened opposite of whatever when it fell is what has got reversed in the short term. But I don't think so. It's a long-term hold into anybody's portfolio. These are largely commodity-driven rally stocks, which you will have to be clear that it can be a small portion of your portfolio and not having a larger exposure to these stocks. You need stable stocks in this market, especially in the market that we have gone through, when carnages have been large as far as the mid-cap space is concerned. Retail has gone through a lot of space. You would like stability in your portfolio and some amount of ambiguity away from having volatility in your portfolio, and that is what we would like to look at.
Okay, Ashwani, what would be the Nifty boundary now? I remember you were talking about 11,050 being rejected. Now we are very close to again testing that mark.
See, the point is that you made a higher low at 10,950 because the breakout zone was about 10,850, 900. So that way, the hopes are still alive that maybe we can get past 11,050. So that way, you have to trade the boundaries. It's still not clear whether 11,050 will get crossed. So for the moment, 11,050 and 10,950 holds on. But if this bank move continues, then chances are that 11,050 may get crossed. So good day today. We've held on to rising averages. So another opportunity to cross 11,050 may be available tomorrow.
Okay, and Mitesh, your thoughts? If there's no major decline in the US markets, if the FANG stocks don't disappoint, what would your approach be for tomorrow?
Yeah, so I think, what we've done today is mostly reduce our short exposure on the stock side, though I think a couple of metal names are still open on the short side, but take some long side, increase your long side exposure, and that includes some financials as well. I think stock specific wise, I would still trade more aggressively. Index, I think we still believe that 11,070 would be a tough level for it to get past, and if it continues going past that, then I think buying into some kind of call options or futures is also an advisable strategy.
Okay, all right, gentlemen, we will then wind it up for today on that note. Thanks very much for joining in. We take a break. On the other side, excerpts from our exclusive conversation with TRAI Chairman R.S. Sharma coming up. Welcome back. Telecom Regulatory Authority of India, or TRAI, has released recommendations on privacy, security and data ownership of the data that is held by the telecom sector. Ashwani Kumar caught up with R.S. Sharma, Chairman of TRAI, to get a deeper insight into the proposals being made by the regulator.
I think it is very important that, you see, if I have produced the data, if the data is, kind of created due to my activities, then I have a primary right on that data. Ownership is a concept of a physical world. Let us be very clear that, ownership in a physical sense, if I own a physical object, you can't own it. It's to the exclusion of others.
Right.
While in a data sense, what can happen is that you can have multiple copies of the data. So this divisibility creates a problem in terms of defining ownership. However, I think the more important term will be who should control the data. as a user, I must have control on my data. And everybody else in the digital ecosystem is a custodian of that data. And therefore, whatever they do with that data should be with my consent, my knowledge. These are very important things.
Right.
So I think the centrality of the control of the user is the basic premise on which we have begun and we have given this recommendation.
Let me also borrow from some of the recommendations, and this one is seems more of an indictment of the current system that we have, where the TRAI recommendations say that the current framework is clearly not sufficient. Just a word on that. We, of course, we have provisions under the IT Act, etc., but we do not have a comprehensive legislation, a comprehensive framework on data security.
No, when we said that the current system is not adequate, that is certainly not an indictment. What we have said merely is that the telecom space and sector of which we are concerned with which we are concerned with, essentially has now new set of players. So, for example, we have very, very extensive licensing conditions of the telecom service providers, which essentially govern, notwithstanding.
Okay, so that's a 326 crore number on the profit line. That's slightly shy of our estimates. I've got the advertising revenue number. So domestic advertising revenue growth is 22% for the quarter gone by, 22.3%. That's what they've done in terms of the domestic advertising growth. The subscription revenue, domestic subscription revenue is up by about 12%, which is in line with estimates. So that seems to be bang in step. The EBITDA margin at 31.9% should also go down well, because that seems to be slightly ahead of our poll. We were looking at about 31.5%. So on the margin front, this seems to be okay. Domestic subscriptions seem to be okay at 12.3%. And the advertising growth has come in at 22.3%. That also seems to be slightly on the higher end of the expectations. We have Sonal joining in with the details. Sonal, these are the initial numbers that I can bounce off you. How do they look?
Well, in terms of ad revenue, it has come in at 23 I'm sorry if you can just...
The ad revenue is 22.3%, the domestic advertising revenue.
So 22.3% is good. We were expecting an ad revenue growth of around 19 to 20%. So 22.3% goes well. In terms of subscription revenue growth, that has come in at around 12.3%. Yeah. That also is better than what the street was expecting. In terms of EBITDA number, that is bang in line what our poll was suggesting. Our poll threw up a number of 561 crores. It has come in at around 564 crore odd. Margins is where it's a positive surprise yet again. We were working with a number of 31.5%. That has come in at 31.9%. Then that on year basis throws up an expansion of around 390 basis points, and this particular margin, if I will look at it, it is highest in last 5 quarters, no, not actually, last 3-4 quarters. So but that number looks really good. I will actually have to go through the...
let me ask you this, Sonal. The advertising revenue, the domestic number for advertising revenue looks very good at 22.3%. The overall advertising revenue is around 11.5%. So I just want to understand, for comparison's sake, the overall advertising revenue, I think that's the headline number we should look at.
Right. The
that's 18.5%. So that's at the lower end of the estimate band.
Exactly. But still, it should not be really bad, right? 18.5% is on the lower band, and it's bang in line with what we were working with. So it should go well with the street. Doesn't look bad at all. But margin is somewhere I think the street should like that particular number. Operational costs on a YOY basis have gone up, and that is the content costs that we were talking about, because they had come up with a new app that is called Z5, and we also have Karan Taurani, the VP Research at Daulat Capital, who is joining us now on the phone lines. Karan, your first reaction on the results? The ad revenue growth is at around 18.9%. We were working with ad revenue growth of around 19 to 20%. Is it good, inline, bad? What were your expectations?
So our expectation on the ad revenue was about 17%. So it's a tad above, our estimate. And on the subscription revenue front, it's slightly lower than our expectation. We expected about 14% growth on the subscription revenue part. It's come at about 12%. I think the overall key takeaway here would be the margin front. The margin has been much better than our expectation, despite the the content cost and despite the investment in the digital platform. But clearly the valuations, are expensive even currently, and the stock has basically underperformed versus Nifty in the last 3 months. And in absolute returns, I think it's given a negative return of close to 15-20%. So, we do expect some kind of positive uptick in the near term in the stock.
So what is your rating on the stock, and what is your EPS estimate as of now?
So basically, if you see, we have a reduced rating on the stock. And in terms of our EPS estimate for FY19, we are placed at about 15 odd rupees. I mean, we had a reduced rating when the stock price was 600 plus, and based on current valuations, I think we'll probably look to upgrade the stock at about accumulated rating. We currently have a target price of 580 rupees on the stock. We don't expect any major change on the revenue front, but there might be a minor upgrade on the EBITDA margin front, and that could have a positive impact on our earnings.
Okay, I'm just going to read out some commentary on the subscription revenue, which is a bit of a concern for Karan, as he mentioned. He said that the Z is saying that the revenue number is up, of course, 12.5%. As per the TRAI notification of the 3rd of July, new tariff order will come into effect in 180 days. We've already started discussions with our distribution partners for a seamless transition. That's what they're talking about. The medium-term outlook for domestic subscription growth remains unchanged. So in their statement, they're saying that because of this TRAI order, they're not looking at any immediate changes in their subscription guidance. However, Karan, I want to take up the question on content cost. How much are you penciling in? Because I guess going forward, that's going to be the critical concern with respect to this margin band. This 31.9%, for how long do you think can Z sustain this?
I think if you exclude the sports business for Z, Z could have operated an EBITDA margin of close to about 34%. Given the current investments in the ZEE5 digital platform, given the investment in the increased programming hours, the sustainable margin for the management is about 30% plus. And that's the guidance, which they've actually maintained. But the problem here is, there is a lot of competition coming from the internet and the VOD space. So you have Netflix, Amazon, a lot of these guys investing big amount of money on the digital platform. On the other hand, there is Hotstar as well, which is providing cricket-based content and getting a lot of viewership on their digital platform. So ZEE5 something is very new as of now. They've not been able to get that good amount of viewership as Hotstar has already done. So I think they have to really invest a lot in the digital platform, and that will really, have a huge negative impact on the margin in the near term, actually.
I'll just give some more numbers to this, Sonal, as well, since we're discussing digital is going to be basically the money guzzler for now. So programming cost is up about 14%, largely across the entire network, and then their advertising, publicity, and other expenses are also up 21.2%. And a large part of this advertising and publicity, I'm guessing, is going into a lot of marketing the digital content that they're producing.
That's correct. We see ads, right? ZEE5 ads are there all over the place. So that, I think, is one of the reasons why these costs have shot up. Karan, one more question for you. So international subscription revenue has declined by around 6.5%. We know there has been a demand problem in some of the countries. Do you think this underperformance will continue? Because we were working with an international subscription decline of around 2 to 3%. It's higher than that. What do you make of this number?
So, international subscription revenue has been declining in the recent past in the 3-4 quarters, and management, has indicated a more flattish growth over there. I think the underperformance there, will continue because internationally also the subscription, the viewership is moving towards the digital platform in a faster way than that of India. So, I don't see such huge growth prospect for the international subscription revenue in the near term as well.
And we leave it on that note. So those are the Z Entertainment numbers. Karan is still keeping a very cautious view on the stock. Well, on that note, we'll take a very quick break. All the commodity and currency market action coming up on the other side with Manisha Gupta.